Welcome, my friends, to the Money D&A podcast. We're your hosts. I'm Dale.
And I'm Andy.
We're just two guys on a mission to help you ditch debt, build your wealth, and live the life that we know you are dreaming about. You were born to live. Each week, we're going to break down some money myths. We're going to serve up some strategies. We're going to hopefully have some fun along the way. Most importantly, we're going to hopefully get your juices flowing and get the conversation going to help you tame your money, to get a hold of your wealth. Whether you are making a whole bunch of money and you don't know what to do with it, or you are just struggling to make ends meet, or anywhere in between, we're really hoping that there is something out of this that you can get that will spur you on to your compelling future. Um, let's jump in. A
Let's
couple of
do it.
weeks ago, Andy, we introduced this idea of the birthday cake, and we took a little bit of a detour, but I think we should get back into this birthday cake thing, right?
I agree.
Uh, I gotta test you, Andy. What was the birthday cake all about? Can you give us a
I
quick
can. Let's
recap?
review this real quick. So we are, and I remember moving this up, right? Because we said there's actually a foundation layer underneath this, right? That is, cash flow. This is expenses are covered, bills are covered, this kind of stuff. We are assuming that you are cash positive at this point, right? So once that is the case, we start with protection. So I'm going to start writing these out. You are going to test me here at this point, so I'm going to make sure that I do this right. So protection was first. That's what we're talking about today. Next was debt management, I believe.
Yeah.
All right. And then it was an emergency fund. I'm sure that's fun. And then lastly, which is what we talked about in that um, introduction, was the idea of investments. And we talked a lot about the fact that people sometimes invert these and talk more investments and protections, and they might get things a little bit askew. So that's the review of what we're talking about today. So we're going to go, week by week and take one of these layers per week and kind of dive into this a little bit. So um, that's what I remember. How did I do, Coach? Did I do good?
Fantastic. Yeah, you
All
even
right.
got the silver platter on the bottom
Exactly.
of that the serving tray of positive cash flow, and again, that's probably another whole other conversation about getting into how do we embrace our income? What do we do?
Mhm.
But without further ado, let's get into protection. Um, and I mean, just while this is up there, Andy,
Oh,
this
that's right.
idea, like you said, it's okay. You can erase it, but this idea of inverting it, like so many times, at least for me, when I was initially thinking about my money, I was thinking about, okay, I want to buy a house, I want to invest my money and grow my money. I treated my income and my investments as sort of the same thing. Here in this birthday cake, really the income making or that cash flow is a bit of a more of a foundation. Not to say that the investments couldn't further solidify that cash flow bit, but
Right.
um, it became like, okay, I want to think about how do I grow my money in investments first, and then oh yeah, there's the debt thing. So we put the investments on top of the growing the money, and
Mhm.
then oh, there should be an emergency fund. So maybe I should save up some money, but I got
Right.
to invest in it first, and I got to make sure my debts aren't doing it. And then oh, maybe I should maybe thinking about getting some kind of protection or insurance or something. But like,
Mhm.
who cares about insurance, right? Up
Right.
until I was
Right.
30, and we were sharing stories about this, Andy.
Hmm.
It sounds like you and I had similar feeling about it. I did
Exactly.
not care a lick. Like it
Hmm.
was a chore for me.
Right.
I was angry that I had to pay even a cent to anybody for insurance. I didn't see the value or the need for it at all. And
Right. Right.
um, I'm really hoping that after at least this conversation, we can maybe, if not change that for you,
Mhm.
or at least make you question
Yep.
whether you should be rethinking about insurance and protection
Exactly.
um, in your conversations,
All
your
right. So
money
let
conversation.
let's dive in here. So why this is probably the question that you would probably get the most as we are giving out this idea of a birthday cake, and we're saying start with protection. So let's start with the most obvious question, Dale. Why protection first? Why not investments? Why not an emergency fund? Why do you think that it makes the most sense to start with that base layer?
Yeah, I mean, I think, I mean, before I pack it in, I do want to clarify that we're not necessarily telling you that you absolutely have to get insurance first. Like that's the first thing you have to invest in. That's the first thing you have to purchase. If you have
Right.
$10 or $100 positive cash flow, then the first thing you should be doing is, but in the very least, it's the first thing you should be thinking about. You should be
Right.
putting into your equation. It's the first thing that should enter into the conversation. Um, I think for whatever reasons, and we could talk about this maybe a little bit after, we don't often think about protection and insurance and protecting our wealth first, right?
No.
But this is really a more foundational layer than all the rest. It's a really important foundation to be setting when you're building up this birthday cake house, right?
Right.
I'll give you some examples. You could be making $100,000. You get a great job right out at the gate. You got $100,000 salary in the year, and you start buying a house, getting a car loan, and getting all these things. First, you forgot to pay your taxes, so there's all this tax money that has to go. That's a whole other question. And then forget first. Let's say 6 months after you get this fantastic job, you're incapacitated.
Hmm.
You can't work for whatever reason. God forbid, something happens to you and you pass
Right.
away. What happens to that debt? What happens to that mortgage, that car loan? The obligations that you just picked up over that time. Well, if you didn't really prepare for it, then you're passing on those debts to somebody else. You're passing it on to your loved ones. Somebody else is going to be on the hook. Maybe your estate has to liquidate your house, or if you're married, then right away you're passing that burden on to a loved one. Let's say you have investments happening. You got a whole bunch of you got $100,000 check as a bonus, a signing bonus for this job. I don't know why I'm picking on $100,000 so much today.
Why not? That's good.
Favorite
I'm,
number.
I'm
Let's say
good
you got a
with
$10,000 bonus for
that.
signing up for this job, or you happen to win the local lottery and you got a few $1,000. And the first thing you did was you started putting money into some kind of investment. You bought crypto or something like that. I don't know if crypto is considered an investment. If you were to pass away, if something were to happen, then the only way that you can understand or appreciate that investment is by cashing it out, right?
Right.
And the moment you cash it out, that becomes taxable.
Hmm.
If it's sitting in a bank, then God forbid, if it's just sitting in a bank account and growing the bank, then it's very possible that you won't be able to get access to that money at all, or somebody else. If you've passed on, then your loved ones won't be able to access that money. The bank says, no, it's our money. It's in the bank, and you didn't have anything. You don't have any wills or power of attorneys set up properly. So too bad, our money on our bank. You can come up with the right, go to the court and come up with the right documents so that we can release that money to you. It's not your money, right? Or maybe it's not. If in the investments, you can take it out, but all the money that you made from it all of a sudden becomes taxable income for somebody who's taking it out.
Right.
Uh, Insurance is a little bit unique because there are so many laws that make exempt all of the proceeds from insurance, right?
Right.
They don't want you to pay for your taxes twice on a certain amount of money. And whenever you're taking, and the laws that we have will actually make insurance either very, very tax efficient, if not completely tax free. And that's pretty unique. That's super, super powerful. Like we talk a little bit about that income layer, but wealth isn't just about how much money you're making; it's how much money you're keeping, and
Right.
staving off that money in some ways. That tax implication, or it's a great way to be able to maximize how much money you are keeping in a perfectly legal way,
Right.
and in a way that's accessible and a way that works for other folks.
Hmm.
We talked a bit too about this analogy, Andy, about building a house. Let's say you are
Right.
tasked with I want to build a house,
Okay.
and we're gonna build a house together. I'm marrying the love of my life, and we decided that I want to build her a house. And right away, the first thing we start thinking about when we're building this house
Mm.
is what color the paint should be in the garage so that it matches my white SUV, right?
Right.
And I've got like a pearly white, slightly reddish tinted pearly white SUV. So what kind of paint color should I get? And how is that paint going to fade over time or something? We start getting into these, what kind of crockery and dishware we should be buying, what kind of toilet we're going to buy. Like we start getting into all these really, really perhaps important and interesting and fascinating details, but we neglect to see that the plot of land that we bought on is completely sandy, so it's terrible to build a foundation, that the foundation that we're pouring is made out of really, really porous and cheap materials, so it's going to crack. And after 3 years, whatever house we built on is just going to completely crumble, including the paint color that I've chosen, the dishware and the cookware and everything else in the house, and maybe even possibly myself and my family that's living in this house, right? It's the same kind of an analogy. It's like going into the house and thinking, starting to build a house and thinking about the shingles on the roof and all these other details first before you really, really build your wealth, your
Mhm.
that house, life as a house.
Mhm.
Great movie, by the way.
Mhm.
With the foundations first, with
Right.
building a city with fortified walls first, so that no matter what happens in your life, whether there is uncertainty, an illness,
Mhm.
death, we don't know the timings of it. Some things we
Right.
know are certain. That this house is this these walls are fortified, that the house is protected, it's on a sure foundation. Even if part of the house burns down, because the foundation is sure, you just rebuild a part of that house, right? And that's easier to do than trying to rebuild something while the foundation is shaky every single time.
Right.
I don't know if this is making any sense, but
No,
this is
completely. And I want to go back to the previous screen here, but I want you to fill in the blanks here. What is certain, Dale? What is certain? Blank and blank.
uh
Here we
what
go.
there's only two things that are certain in life, right?
What is it?
Taxes and taxes. Death,
Yes, we don't have to worry about anything else, right?
death, death and taxes. And
Yeah.
man, this is so funny as you're saying it. Maybe I never never really clued in, but these are the two things that are certain in life. We know is going
Yeah.
to happen, but they're two things that we avoid. It's unbelievable. Like what's going to
It's
happen
so
when you die?
true.
I don't know. I don't want to talk
It's
about it.
so
We don't
true.
plan for it. I just,
Nope.
we just had tax season here, and I just spent a whole week just
Uh-huh.
submitting all my tax numbers and stuff. And I'm sitting here, I knew this deadline was coming. I had months
Right.
to prepare all these materials. Why am I waiting to the last possible week?
Right. Right.
It's funny. It's funny how these
It
things
is what
work.
it is.
But
I don't know if it's a human nature thing, but I mean, you had mentioned right at the top when we were talking about, well, what happens if you or become ill or die? And again, just because it's not fun to talk about, just because it's uncomfortable, doesn't mean it's not entirely and increasingly important. I think you
mm,
had said something when we were getting ready for this, like 1 in 3 people will at some point, experience cancer of some sort, right? I have multiple, both my father-in-law and my dad passed away from complications with cancer. So it's not, and again, it's not a fun subject, but again, we're maybe here to drop some truth bombs here. It's not a matter of if, it's a matter of when, right? These will happen. Regardless, these will happen. Are you going to live your entire life completely healthy? Possibly, right? Possibly. But what is the likelihood that all of your family, right? Your kids, your spouse, your mom and dad, right? I mean, Dale, you were talking about just the seasons of life of having to, kind of take care of your parents and that different thing. So just
mhm,
because these things are not fun to talk about does not mean that they are critically important and could have a significant impact on your finances and how you operate.
mhm. Yeah, I mean, like you say, it's not a question of if, but when, and so all the more reason for us to have these conversations as early as possible. Like now, start with the conversation now. It's not sure it's not the sexiest conversations to be having, but we got to bring not sexy back, and yeah, just
Yep.
tackle these really important things. And I mean, bringing back to our conversation about protection, make sure that you include protection in that conversation first, because
Hmm.
it is it is planning for and incorporating these certainties. Not
Hmm.
don't plan for the uncertain.
Right.
Don't plan
Right.
for like the what if or maybe this can grow this way. Tackle these certainties first while you know that they are going to be certain, and you can hedge your bets even more by making certain what is potentially making certain what you can, like
Yeah. Right.
certain there should be a verb for
Certifying. I
this,
like that.
making
Let's
making
make that
more
a
certain
thing.
what is
That-
potentially uncertain, right? And boy, there's no share of uncertainty in this
right.
day and age.
Yep. I love it.
um
All right, let's shift, shall we? So now that we understand or have discussed, maybe there's more to be discussed at this point. But again, our hope in this is that we are starting conversations that maybe would not have taken place otherwise. So maybe inverse of this, right? Maybe we're cart before the horse here. But what is meant by protection, right? We've already said why it needs to happen first or why it needs to be considered first. Why do you or what is meant when we say protection? What specifically are you talking about?
I mean, it's mainly about insurance,
Hmm.
right? All
Right.
different kinds of insurance. There's 1,001 different kinds of insurance out there, but when we say protection, we're really talking about here insurance, insuring your life insurance. It could be critical illness or disability insurance. Of course, we have the your property insurance, your car, your auto insurance, your home insurance. You if you have a pet, your pet insurance, and all this. But I'm not going to go into all the different kinds and details of insurance out there. But
Right.
surely there are so many kinds of insurance out there, and so many ways. Given the importance
Hmm.
of insurance in our overall financial planning picture and the overall conversation, then you don't have to work too hard to be able to start asking questions about like, well, what kind of insurance and how does this work and what would be the best insurance for my needs, right?
Right, right. So I think now is a good time for me to kind of share my introduction into this side of insurance. And you did mention auto insurance, home insurance. I think there's another distinction that we probably need to make that there are some that are required, at least in the United States, right? You are required to have auto insurance. If you have a loan, you're probably required to have home insurance, right? These are ones that you don't have an option for. That's not the case for these. You don't have to get a life insurance policy or critical or disability. But this is kind of what am I correct? This is kind of what we're talking about as far as protection goes. Yes, if you have auto insurance that does protect against loss on that and home. So there are similarities there, but am I correct, Dale, that we're specifically in our finances, we're talking a little bit more on this side of things? Is that an accurate statement?
Well, I mean, broadly speaking, in terms of the finances, I would say it includes the mandatory insurance as well. Like if
Okay.
you're planning a budget, let's say, if we're talking about how do we tackle this and this and that, I would encourage people to think about the insurance implications, even if it's the mandatory insurance implications, with the planning right from the get go as like a
Okay.
foundation. I'm going to
Right.
have a car. Well, right away, when you think about the
Hmm.
car, factor in your insurance, right?
Right. That's
Incorporate the
true.
fact that you have to pay for insurance into it.
Right.
I want to
Okay.
have kids. Well, right away, you want to insure. You have to think. Do I need insurance for my kids? What kind of
Hmm.
insurance do I need for my kids?
Hmm.
If they come to driving age, I
Hmm.
need to start thinking about auto insurance for
Right.
my kids when they're
Okay.
driving. Hey,
Yep.
fantastic! They've got their license and they can drive, and we
Hmm.
may need to get them a car. You're going to save up for a modest car or a brand new Lamborghini for them. Whatever it is, don't forget to include the insurance
Right.
implication,
Right.
the
Yep. Okay.
insurance considerations. So
Gotcha. No, that does make sense. I'm glad that we had that distinction right there. And I brought that up just because I think that again, what is meant by protection, right? The question, I think some people may have been unclear as to the difference between the mandatory and the optional at this point. So back to my story, we were talking about this as we were getting ready for this. I was not introduced to this. I mean, I'd heard about it before, but like personally, like what it did for me, I did not. I was not exposed to this or basically like laid out like the value of and the necessity of this aspect of thing, life insurance, critical and disability, until such time that I was out of the school. So I'd already been in the schools for about 10 years. I had been on my own, worked with Interactive Learning, the company I own now, probably for 2 or 3 years. And I finally got to the point where, I felt like there was some money that I could invest in this type of thing. Again, had I known what I know now, that probably should have happened much earlier. But it was in a conversation I had with my cousin, and he said, I'm happy to talk to you about investments. Let's have that conversation. However, very similar to what we're talking about with our birthday cake, he said, before we do that, we need to have these hard conversations like we were just implying just a second ago. What happens if you get sick? What happens to Crystal and the boys? What's going to happen if you get, God forbid, something happens to you and you die? Where does that leave them? Are we passing on that burden to them? So that was the foundation. Thank you to Chet. Good job, Chet. Hopefully you're watching this. Um,
Good job.
exactly, right. So that was where I started with that, and then we had the conversation about investment and that kind of stuff. So that was my personal story as to how I got into protection. So I just thought that was maybe kind of more relatable to folks. And I'm standing here as a guy that says that he knows a little bit about finances, but this is something that actually came a little bit later on in life.
Yeah. Yeah. I have a similar story, Andy. I didn't,
Okay.
I was like poo-poo on insurance.
Mm,
uh, Up until I was 30, really. And it wasn't
okay.
until I was 30, I had a conversation with somebody. Actually, this is very similar, with somebody who is now
Mm,
my financial advisor. He sat me through and sort of talked me about the power of insurance and the importance of insurance,
hmm
and really educated me, and somehow swayed my very boo bank, anti the machine, screw the man kind of
hmm
this young rebel in me into applying for my first universal life insurance policy. And I remember being beside myself as I'm like, I can't believe I'm doing this. Like just a couple of
hmm
weeks ago, I never would have thought that this would happen.
Right.
And boy, am I glad that I did. I had a moment during the pandemic when, I was sitting in this restaurant, this very, very empty restaurant in the middle of the pandemic. We couldn't take in any people, and we were only doing takeout orders. And I remember getting to a pretty dark point in my depressed journey, but realizing that no matter what happened to me, if I got ill, or if anything were to go really, really badly or really south, then at least I had my life insurance policy. I knew that nobody would be left in a lurch if
Right.
I couldn't work anymore, right? Like
Right.
like I was showing up there every day and doing this work, but if I couldn't show up to the
hmm
restaurant, then what would happen to my
Right.
folks, and to the other people that I was serving there, and to my family, God forbid, like if anything were to happen. And I
Right.
didn't have to worry about it because it was like that. I had paid for this young 30-year-old
hmm
chap. I was thanking my 30-year-old self back then, saying,
hmm
thank you for being convinced and taking that leap,
Right.
and investing in me now,
Mm,
because I'm sleeping a whole lot better now. I mean, this is myself back then. I had so much more peace of mind that I had
right.
paid for early on in my 30s. I was really reaping the benefits for now that in my 120s, right? Um,
Mhm. Yep.
my I'm kind of curious, Andy.
Okay.
Why do you think? I mean, you and I both touched on the same thing. Like we
Mm,
didn't talk about it. We didn't want to
mm,
really open ourselves to insurance, or life insurance in this case specifically, before then. Why do you think we don't do the insurance enough? Why do you think it is such a non-sexy thing, and why do you think
mhm.
it's not talked about enough?
Yeah.
Oh.
I think it's probably a number of different things. I mean, back to the what was the purpose of even starting this podcast? It's about education. I think that there are so
Mm,
many misnomers and miseducation out there that again, our little offering to you is hoping that we can bring you along the way and get you this exposure. I'm thinking, I got like nephews and nieces that are in their 20s at this point. I would love for them to know in their 20s what it took me till I was 30 or 40 to figure out. So and my boys, right? I mean, we're trying to give you this information ahead of time. So I think education is a big one. Um, I wouldn't say that I had really negative connotations or attachments to life insurance, but I do know that those are out there. You and I were talking before we started of just the idea of this lack of trust. And I get it. It's a we have to find that healthy balance, right? Like, yes, be cautious and not, give your money away or just trust everybody out there. I get that. Dale and I touch on this every episode, right? Find somebody that you know, like, trust, and that cares about you and have a conversation with them so you know that you can kind of open up to them and say, hey, here's where I'm at, here's what I'm concerned about, and then take their advice for what it's worth and move forward on that. So I think that's a second one. And a third one, and I guess this is more my use case, was that I really didn't have, in my estimation, really any disposable, or we don't like disposable, what do we call it, discretionary income at the end of the month in which that I could do this. So that was one thing. I found out after the fact that it is far less expensive to get into something like this than it would an investment, which I think we could probably go on a long journey with that. But so long story short, that's kind of the three things that I think are probably the biggest reasons.
yeah, I I fully distrusted. Like
Mm,
I know you say you don't want to say distrust, but I admit I did not trust the institutions, and insurance companies and banks were synonymous for me. They're just all one big ugly
mm,
corporate, money making machine, and
mhm,
I was a subject to be bilked. Like that
mhm,
was my feeling about it. I very much only saw insurance from that
mm.
quote unquote mandatory perspective, right? Like
Right,
the auto insurance
right.
and paying through the nose for auto insurance, health insurance, or whatever insurance dues I had to give for my
Mm,
professional dues when I was starting out. Like, well, I mean, yeah, we struggle. So I remember being resentful, thinking we struggle so
mm.
much for all this, and you want to then just take our money
Right.
so that we could do this. I had to drive. I needed a car in order to get to work, but
Hmm.
now you need me to make more money so that I can pay for insurance to get the car. Like
Yeah.
I kept thinking
Right.
this is a catch 22, and you're
Kind of
just
a
trying to
racket.
enslave
Yeah.
me and
Hmm.
all this
Right.
kind of stuff. I'm thinking back on it now. I'm realizing they were just excuses for us. They were really
Mm,
just, um, you know, I shouldn't say this for us. For me, it was an excuse that I made to diminish that conversation, to avoid that conversation,
mm.
to just put my blockers and my
Right.
blinders on, so I didn't have to be thinking about
Sure.
these particular things. Because I'll be honest, I was scared. I didn't trust. I was scared of
Mm.
losing my money,
Yep.
and I didn't want to be bilked any further.
Hmm.
And I think your point is exactly right. Like we we don't have in our aspirations, in our dreams, in our planning and stuff, we don't prioritize
Mm.
these fundamental, important,
Mm.
unavoidable conversations,
Right.
right? Like death
Right.
and taxes.
Right.
We don't think nearly enough about that when we're talking about the cash flow. We're just
Right.
trying to think about, like, well, how do I make money? How do I grow money? How do I get a nicer
Right.
phone? Keep going back to
Right.
the
And
phone.
yeah, no, and we talked about that again. I think sometimes we need to record the pre-record stuff because we have some good nuggets there. We try to bring those out
For
in
sure.
the episodes, but we did talk about the fact that really finance stuff, like wise use of finances, is not sexy. Like there's not, it's not fun, it's not, maybe not fun is not the right word, it's not like super exciting, right? I think that's why,
Right.
the investment, people get those out of proportion, right? They put the investments first because that's fun, that's exciting. I can see this. Oh, look at, I had this big growth, and crypto blew up, and I think that was it's very much like the slot machine, man. I could get these crazy gains. Sure, you could also lose your shorts, which I've been on both sides of that. But anyways, I think that it's a matter of just understanding that finance done correctly may not be super exciting. It's kind of the same boring strokes. The ones it's what I hear. Um, Person that I've gone to training with a lot lately says success leaves clues. Find the
Mm-hmm.
person that you want to emulate, that you want your life to be like the people that are wealthy and doing really well, and leave, maybe follow their path here. We need to jump into our third question here, but I wanted to do a little shameless plug here, real quick. You're obviously here watching the Money DNA podcast. This is a really easy site that you can just go to, tinyurl.com/money dash DA. I didn't want to do the little ampersand podcast. Same with our YouTube channel. We have the podcast there, but there's other great content there as well. And then if you're not following the Empower Wealth Solutions Facebook page, you can do that as well. We'll throw this up at the end of the episode here, but wanted to just give a little shameless plug. We're doing a lot of good content out there, and we want you guys to share this with folks. So, all right, with our remaining 7 minutes, my friend, what do we've talked about what is it, where, what is it meant by that? Why do we start with that? But now the question is, how do I start? Right now people are leaning in. If they're like, okay, I'm buying what you're selling here at this point, Dale. How are some different ways that you could start getting some protection on your finances?
You're talking about how do we go through protection specifically, or like how do we
Yeah,
have the
yeah,
conversation?
specifically with, and again, everybody knows how to get auto insurance, home insurance. So we're going to speak specifically about life insurance, disability, that kind of thing. What's the priority? What are some different ways to do that? We've established, know, like, trust, care. Find somebody that fills all of those things, and then have conversations. But just big conversations, or big what are some first initial steps to get that started?
Yeah, the first thing is to have the conversation, right?
Yep.
And
Right.
it's having conversations with uh you said it right on, people that you know, like, trust, and know that they care about you and have your best interests in mind. A lot of the time, I think one of the reasons why we don't necessarily think about protection and insurance is because for many of the banks, they actually don't have insurance products in their portfolio of things that you can do with them, right? So,
Hmm.
or they're not necessarily licensed to talk about insurance, so they don't include it, right?
Hmm.
And our interactions as young uns in the finance world, we don't have, like, we don't go to the local insurance company when we're 12-year-old and open up an insurance account.
No.
Maybe our parents have done that for us, but I that was my story, at least 12 years old, open up my first savings account and later on a
Hmm.
checking account with
Right.
our local bank and the banking institution. So the banks, not to poo-poo on the banks again, but they are not necessarily going to be talking about insurance because they're not
Mm.
selling you any
Right.
insurance products. They don't have any
Right.
money to make from it,
Hmm.
and they're not trying to push or encourage you
Right.
to think about spending your money in those particular places. You should, though. So
Hmm.
you need to find somebody that you can trust in terms of insurance, right?
Hmm.
In Canada, the way we work, and I think it's very much the same in the States. Every state, every province has their own licensing process, and you have to be licensed to be able to talk about the different kinds of insurance. You have your life insurance license, which includes, like, different kinds of investments under the insurance umbrella. You have obviously property and like auto and home and all those different kinds of insurance. So you have to find a good insurance person to be able to talk to you
Hmm.
about it. And
Right.
um, there's lots of good ones out there. It shouldn't be too
Hmm.
hard if you're looking and you're asking the right questions.
Right.
There's lots of not so good ones out there. I'm really
Right.
sorry, my friends out there in the world,
Hmm.
but I see some great counter examples to learn
Yeah.
from
Right.
in my learnings. So the it brings me to my second point, which is you need to start asking questions. You need to
Okay.
have that conversation with find somebody, find the who first, who not why, or who not how, right? And then you start asking good questions to them and have them ask good questions to you. Be open to those good questions, right?
Okay.
What's going to
What are some
happen?
examples of some questions? There you go. Let's hit it.
What's going to happen if I die, right?
Okay.
What is important to me? Like who is important to me in my life that I want to take care of? Are there debts? Do I want to be leaving them with debt? Do I want to be leaving them with money? Right? Some of our peers, we in our mutual circles, we talk about breaking generational, like the curse of like generation intergenerational curses and building intergenerational wealth. Protection is one of the foundational strategies for building intergenerational wealth. You look at, like, the uber rich families in the Western world, and they all utilized insurance strategies to be able to pass on wealth to, like, multiple generations, not just to their kids, not just their
Hmm.
grandkids, but to their great grandkids, or, like, in perpetuity. They have these foundations out there, and their sole purpose is to pass on wealth indefinitely for as long as possible.
Right.
That kind of stuff happens, almost all of it happens within the umbrella of insurance, or with insurance very clearly in that planning structure, right? So
Hmm.
um, yeah, so you need to start asking questions like,
Hmm.
who do you want to bless? How do you want to, what do you envision for your life in the long term? And you mentioned this
Hmm.
before too. We're not thinking about, like, short-term gains. We're not talking about get
Hmm.
rich quick schemes here. We're not talking about that super sexy stuff that's really Instagrammable and postable and, like, easy to make clickbait on. We're talking
Right.
about, like, long, slow, 10-year, 20-year, 30-year timelines.
Right.
We're foregoing um, big gains, but with some risk, right? And the uncertainty that comes with that, for lower gains potentially, but greater certainty, right? I think it's Warren Buffett who said, "I'll take certainty, slow but certain, over short term but uncertain." I'm reframing. I'm going to find that quote. I'm going to find exactly what that quote was. but playing the long game, right?
Right.
So, and it's asking those questions of like, well, what do you want to see happening through your life in 10 years, 20 years time? What do you envision for your life? Who do you want to bless
Mm,
now and in
right.
5 years time and in 10 years time? And how is that going to play out for that? And starting to work with somebody who's able to see and have a full arsenal of strategies available and be able to connect those dots between what we're envisioning and who you are and who you want to bless with what are those choices that lead up to
Mm,
that kind of a compelling picture that you're painting for yourself and for the people that you love, right?
right.
What other questions? Any other questions that you'd want to have
Um,
asked?
I guess let's just, and again, I know we're if we go over, it is what it is, right? So give me some specific policies that, again, back to the questions, we found somebody that we know, like, trust, and care. What are some specific policies that I can ask about or maybe research ahead of time so when I go to have these questions, I can be informed and know kind of the different options I have to look for.
Yeah. It's a bit of a backwards question. You have to the coming up with a policy first, right? Or coming up with the things first is a great way to open up the conversation,
Okay.
but I don't think you should start with the product first. It's like coming
Okay.
up to an Apple store and saying, "I need an Apple Watch because I heard that they're the latest greatest. They're the
Hmm.
thing. I really want an Apple Watch." And you don't have a phone plan, let alone an iPhone or something, maybe that's not the best place to start. If you find a good person, a good insurance person, especially, but a good financial professional, then they're going to start asking you questions because they know that there's thousands of different variations
Mm,
on a life
okay.
insurance policy
Right.
that they could possibly be introducing you to. The more clarity that we have about what we want, who we are,
Hmm.
who we want to bless, and what we want to plan for, like those certain things that we
Hmm.
want to plan for, the better we have that, and the better we can start that in the conversation. Then the financial professional, our role is to then introduce, what are the solutions, what is the product, what is the type of thing that works with your needs, with your
Right.
budget, with your intentions right now,
Hmm.
right?
Okay.
Um, but I mean, specifically, I think everybody should start with life insurance.
Okay.
Very, very basic. The cheapest kind of insurance that you should think about if budget, especially if budget is a limiting constraint, is term insurance.
Mm,
Cover your mortgage with a term insurance policy. Try not to buy a mortgage insurance, but consider buying a term insurance to cover your mortgage as well.
mm,
I can
okay.
get into that another day, but and then there's permanent insurance. Term insurance has a certain end time, but you can look into a permanent policy that will stay with you for the entirety of your life, no matter how old you are and how long you live, right?
Mhm.
Life insurance is actually a type of death insurance. Like it's usually paid out only upon death. There are some insurance policies where you can grow some cash value that you can utilize in your lifetime
Mhm.
while you're alive.
Okay.
But other kinds of living benefit insurance policies would include things like critical illness and disability, right? Um, Death and taxes are certain, and in this age, death by illness or
Mhm.
by some kind of disability is also just as certain, right? Like I think I don't know what the statistics are, but you probably will have a heart attack or cancer or something that's going to debilitate your ability
Mhm.
to carry that silver platter, right?
Yeah. Right.
It's going to affect your cash flow. So consider having critical illness so you're covered in case of an illness, unexpected debilitating illness, or if there's some kind of a disability where you can't necessarily work, not because you're ill, but you have you've broken your back or
Right.
you've injured your leg or
Hmm.
you can't I can't speak anymore. I
Yeah.
I don't know what I do if I can't
Sure.
speak or something.
Right.
That would really put a dent on my income possibilities.
Hmm. Right.
Well, that would be a great time to leverage a disability insurance
Right.
policy. So consider
Love it.
those. Yeah.
Love it. All right. Well, as is always the case, there's more that we could talk about, but if we gave you everything today, you would, your heads would explode and you wouldn't come back to the next episode. So we don't want to leave you headless or bored or anything like that. So just to recap real quick here, we talked about why the protection layer is so important, what we mean by when we say protection, and then how we should start. Again, there's lots of different things to do. It sounds like a broken record here, but find somebody that you know, like, and trust. Dale and I would be honored to have a conversation with you. Between the two of us, we can probably get you taken care of. We'll take good care of you. If not, we are good guys and we will get you directed to the right path. So have the conversation, ask the questions, get your birthday cake in order, not inverted. Yeah.
Yeah.
All right. Very good. So there we go. There's our socials. Check us out. We're so cool. And we'll see you next week. Okay.
Thanks so much, everybody.
All right. Thanks, guys. See ya.